do something. We just don't want to be here giving you information. We want to be able, and we're not here to motivate you at all. Like your goals and your quality of life should be the ones that motivate you, okay? We want to give you the information, you know, to inspire you to take action, but that's why we love it when people also share their journey, share their progress, because we want to make sure that everything that we're doing here is not done in vain. So we are taking measurement. So that feedback that you provide us, hey, Michelle, you know, because you know, you and Denisha dropped these gems, you know, about the credit card thing. I was able to lower my interest rate. You know, when Denisha brought the attorneys on, I was able to get my mom a will, get my mom a trust. Or because, you know, we had the real estate people on, I was able to get in position and buy a house, or buying my second home, whatever it is. We appreciate, you know, that type of feedback. Absolutely. Because again, it's not just absolutely, you put that right in the chat box, because it's not, again, it's not the knowledge is power, it's applied knowledge. It means nothing if you don't apply it, okay? So with that being said, we're gonna not further ado, again, for those, everybody else who's hopping on, please share the link. We are gonna be going over some things that you may not be aware of. You guys always know we like to throw curveballs, a little extra bonus gems that on top of what we're covering, that sometimes nothing to do with what we're covering, or it does, but it's not on the slide, okay? So again, share that link out there. And like when Britt said, when she gets to the office, we're gonna try to, you know, queue up all of our Facebook friends, because again, without the Facebook, we're not able to reach everybody that's out of state. So even if you have somebody that's out of state, doesn't really matter. Wherever our people are, we want to get this information to them. Again, all people are welcome, but we are unapologetic that we are talking about this information that's for us, by us, okay? All right. So without further ado, and again, pay attention to that chat box. If you did want to, you know, support us, we'd be happy with whatever kind of support that you may give us. And support is also sharing the links, not all just about you contributing a monetary gift. It's also about sharing that, you know, that link as well with everybody else that you love and care about. All right, so that being said, Mr. White, if you can cue up those slides, we're going to talk a little bit about what is next. I mean, so you guys can see, you guys can be able to see the calendar really quick. And we encourage you, again, we do the Building Black Wealth every second Wednesday of the month. Every second Wednesday of the month, we do Building Black Wealth. Okay, so our next session would be June 9th. That is about building wealth for your family, building a legacy. You guys don't want to miss that. We toss that word building wealth around, you know, and generational wealth very loosely. But when I look at people's, you know, financial plans, the situation, a lot of people are way off, or some people just need a little bit more tweaking, okay? But you don't want all your hard work to be done in vain. We gotta break those generational curses and really focus on that you enjoying your money while you're here, okay? So if you live too long, you still want to enjoy your wealth, but you also want to make sure you're passing some of that down, whether that be in your 401k, your IRA, your independent investment accounts, property, land, whatever it may be of assets. You want to, so we're going to be talking about building it, growing it, how to preserve it, and passing it down, okay? The next one is July 14th, retire, the Retire a Millionaire. Too many people are retiring broke. You may even know some family members or loved ones that end up retiring and they got to go back to work, or they can't retire because they ran out of money, okay? Or they don't have enough money put aside because they were borrowing money from their 401k to put for down payment on a house, or they were borrowing money from their 401k to pay bills or do whatever, or they don't have a 401k, they don't have an IRA. So we definitely want to address that. There are a lot of, someone put in the chat, there are a lot of seniors that are still dragging their mortgage into retirement, and that's a no-no. I work like a dog to make sure that my clients, when they retire, that their mortgages are paid off, okay? So again, market calendars for June 9th, so let's be proactive, right? Not reactive. June 9th, mark your calendar, and July 14th, and then August 11th, we're gonna kind of take it off being your own boss. There's a lot of people right now that are all about that entrepreneurship, doing entrepreneurship because they saw that there was no such thing as job security. A lot of people lost their jobs, lost their businesses in 2020, maybe because they didn't have enough money set aside. They maybe took some risk and didn't do proper planning, or they just didn't know. It doesn't really make a difference, but a lot of entrepreneurs were created. I always believe that there's always opportunity right in the midst of adversity, okay? There's always opportunity that's in the midst of adversity. Hey, Vivian, glad to have you on. Thank you for joining us. Awesome, okay? So we're going to be talking a little bit about, again, how you get your control back by being an entrepreneur for August 11. Okay, so let's just dive right into it. Okay, so today we are going to be talking about the importance of life insurance. Okay, now life insurance, all it is, again, life insurance, like car insurance, right? Car insurance, you get into an accident and you can replace your car. Life insurance, you cannot, bring you back. Okay, should not, you can't bring you back. What happens was that we don't have life insurance. What happened? We leave our family devastated. I mean, you guys probably heard of, GoFundMe and things like that. So the whole idea of having life insurance is to go fund yourself. Okay, and we're going to talk about why that's important and why everybody should own it. I don't care if you're single living at home, or if you're, if you have kids or no debt and whatever, everybody should own it. So I'm gonna work on that mindset about why the importance of life insurance. Okay, next slide, please. Okay, so let's just talk, you can go to the next slide if possible, please. Thank you. All right, so everybody's heard of Susie Orman. If you haven't, Googled her. She is a guru. She actually used to work for Primerica back in the day in the early 80s. Same thing with Dave Ramsey in the 90s. Around that time when I started Primerica, Dave Ramsey was still in Primerica, doing his radio show and talking about stuff like that. So it was pretty cool. I didn't have a chance to meet Susie Orman because she left before I got in, but Dave Ramsey was already in Primerica at that time. But let's talk about what Susie Orman says. If a child, a spouse, a life partner, or a parent depends on you and your income, you need life insurance. I'll repeat that again. If a child, your significant other, your life partner, a parent, grandparent, it could even be a business owner, depend on you and what you bring to the table and your income to float their quality of life, you need life insurance. And that's straight off the top from for Susie Orman. Next slide, please. Okay, so let's talk a little bit about what, again, why do I need life insurance? Just here's some examples. I know the image, didn't come out that great, but I'm going to read it right off the top. Upper left-hand corner, if you are the breadwinner, okay, life insurance can provide income replacement. You guys, we got to change our mindset about life insurance. It's not just digging a hole, throwing you in the ground, throwing dirt on you and putting a headstone. It is about replacing your income, because when a person passes away, your income passes away with them, okay? They take their income with them. So that's what life insurance is there, so their quality of life can continue. Divorced parent, they're divorced or you're separated, okay? If two incomes were coming in, but now this person became a single dad or a single mom, that should cover that, okay? Someone with co-signed debt and student loans, you don't have to put it in the chat box, but either you have a Parent Plus loan, or if you know people with those Parent Plus loans, the student loan industry is killing people right now. That's the big, actually I'm gonna zip my mouth. I was gonna say something, but I'm gonna be nice. At this thing, because I feel better, right? So I'm gonna be nice, right? I'm gonna be nice. So anyways, those Parent Plus loans, or you co-sign on a car, or you co-sign a credit card, better have life insurance. Okay, better have life insurance. Someone who wants to provide an inheritance, what a perfect way that you can pay, invest $30 to $50 every single month, and somebody can get a check for $500,000 or $1 million, depending on how much you got. I mean, listen, the Jewish people, when the German people were massacring them, and they took all their gold and all their jewelry and things like that, that demographic, they went out there and they bought life insurance and put it on everybody. That's why that's how they collapse time frames to build up wealth. Again, we're going to be talking a little bit about how to change your mindset about life insurance. Whether you're a stay-at-home mom, a homeowner, absolutely, especially for you entrepreneurs or business professionals that that are out there, same thing. If you put up money, another person put up money, and you pass away, business owners, you need that. Even people that are high net worth individuals. Next slide, please. Okay, so that's why you need it. So everybody needs life insurance, but what is it? What is life insurance? Next slide, please. We're gonna just move right along, Mr. White, so you can just kind of go at my speed, please. All right, so life insurance is the source of providing a strong, financial support for you and your family members. It said strong. It didn't say weak or an okay and just getting by. It says a strong financial support for your loved ones after a person passes away. Again, it is an integrated part of sound financial planning. Any financial professional. I know that sometimes some people are a little bent when they try to reach out to a financial advisor or a financial planner, like, man, they didn't do nothing, all they gave me was life insurance. Okay, so yeah, that part may have sucked because you probably wanted to try to figure out how you can build wealth and get involved in Bitcoin and stocks and all this other crap, right? All that stuff is important. However, if you have kids, you have debt, you have a lot of expenses, you need life insurance. You need life insurance. Yeah, maybe they could have approached it a little bit different, or they should have addressed your needs first. That's why you got to be, again, be very mindful of the people, of the financial professionals that you pick, okay, to help you with your financial planning and your financial advising, okay? You want to make sure that your needs are being met first, but then you also understand if you're going to them for their financial expertise, you also have to respect that. There's still like an order of things that have to be done, because so what if you're doing $100 a month into your IRA and you pass away, 2 years later, you got $2,400 in there. What is that going to do? What is that going to do? But life insurance kicks in, your family is not devastated. So there's a method why they do that. But does everybody need life insurance? No. And we're going to talk a little bit about that. Okay. So again, what is life insurance? The aim of different types of life insurance plan is not only to protect you and your family members, but financially, but also help you achieve whatever your goals are. If a person's life expectancy was cut too short, once again, that life insurance can kick in, so the kids can go to ballet, can go to college, have a sweet 16, have an 18, a graduation party, be able to buy the house, start a business, or do whatever. Okay, next slide, please. Okay, so we know what life insurance is, but let me tell you what it's not, you guys. It's not GoFundMe. It's not GoFundMe. GoFundMe is not life insurance. Fish fries are not life insurance. Car washes and bake sales because someone passed away, that is not life insurance. Now, again, unfortunately, some people don't understand the importance of it because we don't talk about money in our community. Just think about it. How many of you, right? Some of us had that birds and bees talk. I didn't have it, but you may have. But when did someone, talk about, sitting down, talking to you about what credit is and building credit? Maybe a small percentage, of you here, okay? Erin says fish fries are fun. Yeah, but not if you only earned $1,000 and it costs 15 grand to bury somebody. You know what I'm saying? So the idea is that you got to put that stuff in place so you're not leaving our family devastated. But we don't usually talk about that at the kitchen table. Both of my parents are immigrants. My dad didn't speak English when he came here. Nobody came to Mattapan and knocked on my mom's door and says, hey, you know what, you're a single parent. Let me show you a little bit of how you can build wealth and make sure that your daughter isn't left devastated if you passed away. And also maybe we can help you put away money for her for college and things like that. Nobody came and knocked on anybody come to your house and do that? I'll wait. Okay, I didn't think so. I didn't think so. No one does that. That's why we're here. We're trying to, break those generational curses, you guys, and give you the knowledge. This knowledge is in non-melanated households, and they talk about it. I can't tell you because I have a diverse client base, okay? I can't tell you. I don't care how young they are. They always know about money. But what's wrong with our Black and brown children? You know, we work hard. We have a greater need to know these things because we work the hardest and usually get paid the least. Even if you are getting paid 80,000 and above, trust me, somebody who doesn't look like you got a little bit more. Okay, next slide, please. Okay, next slide. So if you're a breadwinner, that's why you need that. Okay. So did you know 7 in 10 women think that everyone should have life insurance, but yet 40% have no coverage? Now, again, earlier, I asked, I said, where are my ladies at? I'm not even going to have you put in the chat box if you have any life insurance, okay? Because it's not what this is about. But if you don't have it, you got to talk to your financial professional. I'd be happy to chit chat with you, but you got to get it, okay? You got to get it, because you guys, listen, the only way to go to heaven is that we got to die, okay? The only way to go to heaven is we have to die. And if you don't believe in heaven, guess what? None of us are making out of here alive, okay? None of us. So we got to put that in place, okay? So did you know 39% of men and 40% of women have none, none at all, okay? Some don't even know what the importance, of it is, okay? So next slide, please. And you guys, we are going to be monitoring the chat box too, so definitely pop your questions in there. We're going to answer the questions at the end, but most likely your questions will probably be answered as we continue on. But just in case there aren't, definitely pop it in the chat box. Did you know half of seniors let life insurance policies lapse? Know why? They're still dragging debt into their retirement. A lot of them are raising their grandkids too. Some of them could still be raising their kids, depending on if life happened, something bad happened, like a divorce or illness, something like that. Okay, 55% of seniors said that they let a life insurance policy last because it was not an asset but a liability, because they didn't understand. They didn't understand. 24%, the reason that they bought life insurance, their situations have changed. Okay, and doesn't matter whether it was somebody between 66 and 74 years old, or seeing that had high net worth, or one that high, had higher education. So just because you have a PhD or a master's and a master's in business administration, what's it got to do with personal finance? Has nothing to do with personal finance. I meet a lot of people that make great income and still don't know how to maximize their money, whether the person's making 30 grand a month or 40,000 a month, because I have high net worth clients. And they still, one thing I do know about high net worth people though, the word saying doing okay never comes out of their mouth. They always say, no, if there's a better way, show me, Michelle. If there's a better way, show me. And I'm doing better than most, but I want the best. Tell me if there's something better I should be doing. They never talk about I'm all set, I'm okay, I'm good, we're good. They always love to level up. That's why they're high net worth. Next slide, please. So again, doesn't really matter, but sometimes some seniors don't even need the life insurance, again, which will cover in a record. That's right, Randall. You always got it. That's why I love it. You guys are here because you're looking to improve, right? So again, if you're liking this so far, definitely share that link out, text it, email it. Okay, I don't know if Brett, I know that we're recording this, so which is good. So if any guys got to hop off, it is going to be recorded. I know that we're going to be posting to Facebook soon. Any update on that, Britt, before I go into the true and false questions? Nope. Okay, so we'll keep going. All right, so let's test your life insurance awareness. Okay, so you can pop it in the chat box. Here we go. True or false? In order for your spouse to get life insurance money, if a person passes away, he or she needs to be the owner of your life insurance policy. Is that true or false? You can put it in the chat box. Okay, someone says false. The beneficiary, false. Okay, all you guys say false. They need to be the beneficiary. Yep, false. Okay, great job. Next slide, George. Okay, so yeah, no, you don't. You don't. They don't need to be the owner. So the beneficiary gets everything. Nice job, you guys. All right, here we go. True or false? Your life insurance coverage must equal 10 times your income. That true or false? Your life insurance must equal 10 times your inheritance is 12. Okay, false. Okay, must equal 10. Okay, true. Hey, Sandra. Okay. All right. Hey, Tasha, I'm glad that you're on and feeling better. Okay. All right. So here we go. So next slide, George. So let's talk about that. So again, you guys, this is all about getting in where you fit in. Okay. So how much life insurance, should you take? If you're unmarried, the industry standard, okay, the industry standard, if you're unmarried, is 5 times your annual salary. So if you make 50,000, you need 250,000 if you're unmarried, right? If you're unmarried, but you could be unmarried and have children. So if you are unmarried, but you have high responsibilities, it's 10 times your salary. Okay, it's 10 times your salary. So if you make 50,000, you guys, you need $500,000. But imagine if a life insurance person had said to you, you need $500,000 without explaining to you the reason why. You might go, holy crap, that's a lot. I don't need that much. No, yes, you do. If you make 50,000, if you make 100 grand, you need $1 million. You need $1 million. But it also depends on your quality of life, and most importantly, what type of quality of life you want your loved ones to have. If you don't want them to struggle, if you want that to maintain the same type of standard while you are alive, or get better, that's completely up to you. That's why this information here is just general information, you guys. You must take the information, but then customize it to your situation. We're just giving general information. Again, if you want something that's specific, talk to your financial professional. If you don't have one, I'd be happy to chit chat with you, but you got to get information that's specific, okay? But that's what it is. So again, tips to save over 80% on your premium: take only term life insurance. This is an industry standard. Susie Orman, Dave Ramsey, not just Primerica, but everybody says you can get a lot for a little. Now, there are some times, but there are also times when whole life insurance makes sense too. Teeny tiny small percentage, not a lot, but a small percentage. But you can get a lot more for less with term insurance. You got to make sure you're on the right kind though too. Okay, the insurance industry is very slick, so we're going to be talking about the different types. Okay, it talks about never take universal life insurance, things like that. Again, talk to your financial professional, your tax person, because there's usually they're bundled together with like funds, and if fees are ridiculous. Okay, the fees are ridiculous. But again, you got to look at, pull out your policy, try to figure out what it is that you own. If you don't know how to talk to your agent, but if you don't know how to go over it, you want to get a second opinion or whatever, I'd be happy to to review it with you. Just again, if you're going to be investing that money, you want to make sure that it does what you thought it was going to do without any surprises. Okay, all right, next slide please. So we're talking about the percentages. So here again, or 7 times, multiply your yearly income by 7 if you have few dependents and few debts, or by 10 if you have large debts. You can have a large debt. You guys, newsflash, a mortgage is debt. If it shows up on your credit report, it's debt. Debt is not credit cards, and it's not a car note. Your mortgage is a debt. You borrow that money. If it shows up on your credit report, a lot of people say, I don't have any debt, I just got my mortgage. Your mortgage is debt. If it shows up on your credit report, that's debt. So everyone that's out there rocking a 3-family house or 2-family house, anybody put in the chat box, how much do they want for a 3-family house in Roxbury or Dorchester? I'll wait. How much is a 3-family house going for now in Roxbury or Dorchester? Anybody want to take a wild guess? 800,000, okay? That might need some work. 1.5, yep, they're over $1 million, you guys. They're over. You imagine, you imagine, especially you guys that may have lived in the city all your life. I remember when 3 families were going for 180 and 250. Okay, yep, 2 million depending on where you're at, right? So again, imagine having a $2 million mortgage or $1.5 million mortgage, and you're only rocking a 350,000 life insurance policy. You're underinsured. Randall says he should have bought them. I know, right? Exactly. And you know what, Randall? That's a great point. The problem is with a lot of people, especially our people, we think because we don't see enough of it that it's too good to be true. And a lot of times we don't know how to analyze an opportunity. That's why we teach here, because we don't want opportunities to pass anybody by. We want to educate you so fear doesn't get in the way, So that way you can make an intelligent decision and know how to take the opportunity and to jump on it. But a lot of times we don't recognize an opportunity until the bandwagon happens. Like Bitcoin. Bitcoin's been around for 20 years, you guys. It was starting at around $5. You try to get Bitcoin now, it's like thousands of dollars. Okay, thousands of dollars. So newsflash, it's been around for a long time. You're just hearing about it now because the world has gotten a little bit smaller. Okay, next slide, please. All right, so true or false? If you have life insurance through your job, you don't need a personal life insurance policy. What do you think? True or false? If you have it through your employer, like whether it was, if you work for the state or if you work at a hospital. Okay, true or false? If you have life insurance through your job, you don't need a personal life insurance policy. Okay. Okay, everyone's saying false. False. Hey, Lisa. Okay. Dora says nope. You guys are the best, I swear. All right. Hit it, George. What do we got? Everyone did awesome. That you guys are right. It's false. You need it. Here's the reasons why. Let's talk about life insurance on your own versus group. Let's talk about the ownership. If you have it outside of your job, you own it. You have it through your job, they own it. They own it. Okay. Premiums. Now your premiums are guaranteed. You get discounts available based on your health if you have it on your own. Now, if you have it through your job, your premiums aren't guaranteed. There are no discounts based on your health, but usually it's a lot lower because we're talking about like 100 or 1,000 people in your company. Okay. You got like 1,000 people.
Hi, Sister Bernard. Did you see it?
Oh, someone has their mic.
Sister Bernard, did you see it? I just sent it over.
Someone is trying to get information over to Sister Bernard. If you can mute your mic. Because you belong to a group plan. Okay. What about your coverage? You choose your coverage based on your needs at your job. Sometimes it's 2 times your salary, 4 or 5 or 6 times your salary. Again, based on what they say, based on what they offer. That's why you have a lot more control when you have it outside of your job. Look at the chat box blowing up now, all the questions. I love it. Yeah, throw the questions in, we're gonna get them to the end. Beneficiaries, you both choose your beneficiaries, but here's the thing. Just like if I was a guest in your home, right? Can I tell anybody what to do in their home and I'm a guest? Yes or no? No. Look, I didn't get it finished. You guys are already popping in no, right? Exactly. Okay. Because you own it. It's yours. You're in control. That's why we tell people, try to get life insurance outside of your job, because if they own it, they don't have to pay your beneficiary. They don't have to, you may have picked 10 times your salary or 2 times your salary. If they're going to cut costs, like a lot of companies did in 2020, some of you out there may even had gotten shocked when you found out that you could not contribute to your retirement plan or they stopped matching. Did that happen to anybody? You want to unmute your mic? Did that happen to anybody out here? Your employer stopped matching your 401k? Yes. You said, yeah, that happened to you?
Donna, yeah, it's horrible.
Hey, Donna, yeah. So did they? And Latania's like, yes.
We're together. That's why we can say yes. Oh.
Hey, well, I'm glad you guys are both on here. Yeah, a lot of them stopped. Thank you, Donna, for sharing. I appreciate that. Yeah, a lot of people. Thanks, Sandra, for popping that in the chat box. Yeah, they stopped it. Right. And then some of them have restarted it. One of my clients told me they couldn't even contribute. But here's the thing. If you're a high income earner and you can't contribute to your company's plan, because that's deferred income, that's deferred on growth, that means that you get a tax break on the front. This is not the investment part, but I love investing. So I'm going to talk about it. Right. That's why I said we're going to drop extra gems. Here we go. If you are a high income earner, like you make 6 figures and over, or you make like 80 or 90,000, but high income is over 6 figures, and you're not able to contribute to your 401k, you can get killed in taxes. Because see, it's tax deferred money. Because you're deferring your tax liability for down the road, you get a tax break on the front end. So if you're putting $1,000 a month, every single month away, that's 12 grand a year. So if you make 100,000, they're going to tax you on 88 grand. They adjust your gross income, but what you contribute. So imagine if your employer for that first 6 months had told you due to COVID, you couldn't contribute, or they kept to the end of the year. That one of my clients freaked, and I go, "Are you forgetting that you have an IRA with me?" She goes, "Oh yeah, thank God." She started putting money in there. You see, so again, that's why we tell people, you take your control by getting services outside of your employer, okay? And then the last thing is portability. What happens is that you can't take it with you. Once you leave that company, you cannot take the life insurance with you. Some companies, if they allow you to do it, it'll convert to an individual and your costs are gonna go up, okay? Next slide, George, and thank you.
I had a quick question.
If you could do me a favor, please, if you can just put that in the chat box, because your question may be answered as we go through. I promise we will answer your question, okay? But thank you. So did you know that according to a recent study, 59% of unmarried mothers and 69% of unmarried fathers have no life insurance? Now, listen, I was raised by a single mother. Shout out to all the single moms out there and single dads out there. You guys got a lot on your plate. So when you're going to sit around and talk about some life insurance, sometimes you do and sometimes you don't, right? And you just get busy with life. You're working 2 jobs, trying to go back to school or do whatever. You're fighting with the kid's father or whatever's going on, right? Sometimes it's on your brain, but it's the last thing that you get to add to your long laundry list of things to do. Single mothers, listen, either say I agree or disagree. If you're a single mother in the chat, does your list continually, as soon as you check things off, things keep adding on? Either I disagree or agree. Put that in the chat box for all the single moms. There's always something. I was raised by a single mother. There's always something that comes up. Yeah, you guys are busy. You guys got hurt the most in 2020. Okay, it's endless. It's endless. But you need to take a few minutes somewhere in that schedule to get that life insurance, so you don't need so you don't have to have that GoFundMe, or worse yet, a parent step in or siblings step in to take care of your child, especially if they don't know how to manage money. Even if you had life insurance, watch this, you guys. Imagine having a $500,000 life insurance policy, and you left that money with a beneficiary, but that beneficiary doesn't know how to manage money. That's why I also like to talk to the beneficiaries, because that way your wishes can be met. Because you hear about people getting large sums of money and just blowing right through it, right? And blowing right through it. So you don't want that to happen. You definitely don't want the state to step in and handle your affairs if you don't have a will, okay? Which is, again, that's the next seminar we're going to be going over, why it's important to have a will. Next slide, please. All right, so you need to have a medical exam in order to buy life insurance. True or false? Anybody in the chat? True or false? You need to have a medical exam in order to buy life insurance. True or false? Okay, someone says false. Okay, possibly. Fabulous is true. Depends on the insurance. Look at Venicia, all the smarty patati. See, I love it. See, but Venicia is a veteran to building Black wealth, right? Venicia, unmute your mic. Say hey, girl.
Hey.
Hello. Listen, Venicia, used to, she never, if she wasn't there, she sent her spouse when we used to meet in person. I'm glad to have you on. So next slide, George. So again, actually that's, you know what? Or you don't, it depends. You can have final expense insurance and you don't need a medical for that. Okay. Because if they're going to just cut you a check to pay for your plot, your headstone, the funeral costs, flowers, and all that type of stuff. And you don't need a medical exam. A lot of people get final expense insurance if they have a pre-existing medical condition, okay? That's why we talk to young people to get it when they're younger, okay? But let's talk about some of the things that will determine your life insurance premium. Your lifestyle, okay? There's lots of wine glasses on there. Again, a little goes a long way, a lot doesn't, okay, or too much. We're also talking about your age. The younger you get it, the better. That's why I appreciate, I love it when moms are adding, soon as their kids come out of their womb, they're adding their kids to their policy, because you're protecting their insurability, you guys. As people of color, due to our genetics, usually sometimes we're predisposition for diabetes, lupus, high blood pressure, okay? Was it sickle cell anemia? Unfortunately, we have some of those things. And if it may not get us when we're younger, sometimes it gets us when we get older, okay? So that's why, again, when you get coverage, no one's trying to, again, all my Caribbean folks out there, I'm about to say, ain't no bad juju. Ain't nobody trying to put no jumbi on you, okay? It's all about being proactive, changing our mindset about that, and you're protecting your child's insurability, okay? Also, if you smoke, your cost could be double, okay? Your cost could be double. Any pre-existing conditions like I talked about, or even the level of coverage you need will affect whether you're getting 150,000 or 1.5 million, and also maybe other people that are covered by your policy. You may have someone that might be a little bit more high risk and things like that. That will determine your premiums. Here's something else. Next slide, George, please. Here's something that will also, this is just what happened that most people did not know during COVID. You guys, the life insurance industry has now changed. Actually, all the industries have changed due to COVID. I've never seen anything like it before in my life. You guys, if you got COVID and you had tried after you got out of your incubation phase and whatever, and you tried to get life insurance, you'll be denied. You're going to be denied. Okay. A lot of people were in for a rude awakening because they knew someone that died due to COVID, or they saw people were dying. They were trying to get life insurance and they may have caught it, somewhere, and they're trying to get it. You will get denied. Okay. So, but here's the thing. If you're trying to do it so close to the time that you got killed, was it like 10 weeks? Was it 10 days or 2 weeks or whatever? The industry standard says that you have to wait 90 days from when they release you that you can go out into public and things like that. You got to wait 90 days. Anything before that, you're going to get denied. For anybody out there that thinks that they know it all and you try to get it, even though you just got recovered from it, they are marking and tracking it. Okay, so you ain't trying to outsmart the system. Remember, the system is hundreds of years old to oppress, especially our people. Okay, but at the same time, they are in control of money. They're in control of everybody. Okay, they're in control of everybody, but you ain't trying to outsmart them. They're tracking it. Okay, that gets put on your medical information, so you ain't getting out of it. Okay, I'm here again. You don't gonna like the truth, but my job is to tell you the truth. Okay, get mad at me if I lie to you, but not for keeping it 100. I'm here to give you the information and not telling you, so you can make an intelligent and informed decisions about what you got to do with your finances. Okay, so if you don't have life insurance, get it. Okay, get it, because you got to qualify for it. You don't buy it. The only time you buy life insurance if you're just getting that final expense insurance, and even then it's going to cost you depending on your age and maybe what you got going on. Okay, but yes, you have to wait 90 days and possibly you'll get approved. Some, I think it's 6 months depending on the insurance carrier, because it's all about level of risk. Okay, so what are the classifications? Preferred plus means that you are in excellent health. Okay, you are in a high ideal height and weight ratio. Okay, so let me tell you, why that's a problem for us. We're naturally curvy. Okay, some of us even packed on some COVID pounds, right? There were a lot of people, during this COVID that I had covered, got life insurance. A lot of them could not get preferred or preferred plus because they packed on the pounds. You guys, they scaled everything differently because, again, it was too much uncertainty with what happened with COVID. Forget about COVID killing. You can also have a heart attack due to all the stress and anxiety as well. Okay. Then there's standard, there's standard plus, there's standard, and there's substandard. Okay. So there's levels. Like there's levels to everything. There's levels to the life insurance classifications as well. So the younger you are, and if you take good care of yourself, then the higher probability, that you're going to get preferred plus. Okay. But again, some of us, we made some poor choices, when you're younger or whatever, and you get denied. Let me tell you that those that will get denied, felons will get denied. Okay. Felons, no way around it. It is what it is, but they can qualify for final expense insurance. If you have an out of control driving record, like 5 or more moving violations, means you're reckless. You can either hurt somebody or you're going to hurt yourself, okay, that person can has a possibility of either get it denied or what's called rated, may cost them a little bit more money. Okay, so again, that's why we need to have these conversations with our kids, especially like our kids like to, like smoke herbs and edibles and drink and do all kinds of stuff and experiment. We got to talk to them that can be very detrimental further down the road. That's what we got to talk about wealth building in our household. I'm not saying you got to have fun, but you just got to just, watch it. Okay. And then the other part, again, the 5 keys to calculating life insurance costs. Again, it's the type of coverage you have. I said your health, your age, again, your hobbies. You can also be a daredevil. That can possibly get you denied or rated, okay? And also your gender, because men usually pay more than women because their life expectancy is shorter. We live a lot longer than men. They tell us, because we killed them off, but whatever. But anyways, okay, so next slide. All right, here we go. So what are the types of life insurance? Next slide. So there are 2 types of life insurance, okay? So there's term life and there's whole. There are several different types of term, and then there are several different types of whole life, okay? So let's talk a little bit about the term insurance. So it provides protection, for a specific limited amount of time, okay? So either it can be 10 years, 15, 20, 30, or even 35 years. I know our company offers 35 years. A lot of companies don't, but some do, okay? 35, and then you can keep going. You can keep renewing it until you're like age 80 or 90. We don't recommend that. That's kind of ridiculous. Why would you need life insurance at that point, okay? Okay, it provides no cash value, but it offers lower premiums, okay? Some people, care about the cash value. To me, it doesn't make sense. You got to borrow your own money, but hey, if that's what you want to do, but it doesn't come with the cash value. And it offers protection for specific times of need, such as mortgage, or you got, some people have a lot of term insurance because they have a mortgage or they have a family and things like that, okay? There's a lot of, some mortgage companies like to sell decreasing term as mortgage insurance. So they figured, okay, as your mortgage goes down, you should also have life insurance on you too, because God, if you pass away, the mortgage can pay. Life insurance can pay for your mortgage. And my thing is that if my mortgage is going down and my life insurance is going down with it, what if I refinance? Are you going to readjust the premiums? Are you going to readjust it back? See, so we don't really agree with that either. But anyways, all right, so whole life. It's designed to stay in force, again, operative word, whole life, for your whole life. So you can pay for it up until like your age 100 or 120, because again, the world's different now. Some people are living a lot longer because all the advancements in medicine, okay? It has a cash value, okay, that again, some of your money goes to pay for your premium, some of it goes into what's called the cash value. The issue with the cash value though is if you need it, you gotta borrow it. And when you borrow it, they charge you interest. And if you pass away with that loan on there, they're going to take it from the top. But if you live too long, you want like all the cash value out, you got to get rid of your insurance. Okay. Some people don't believe me. I said, you don't got to believe me because I can show you better than I can tell you. Get your policies out and I'd be happy to show you because it's there in writing. Once again, when we're working 2-3 jobs or working overtime, when are we going to read those things? Right. So my job is I can care less if you do business with me or wherever you're doing, you should still know what you own because you cannot make the adjustment when you're gone. You can't like update your policy like you can with like your cell phone service carrier or your home insurance and your auto insurance. You don't want to leave your family devastated. Cash value can be accessed for any reasons and can provide some guaranteed income during retirement. Again, depends on what type of whole life you own. Some of it comes with investments and things like that. And again, I'm not going to kind of go over all that because we'll be here all night long, right? But again, if you have these type of policies and you want me to take a look at it, I'd be happy to do that. Again, just so you'll know what it is that you're paying for if you want a non-biased opinion on that. All right, next slide, George. And thanks again for the questions. Again, Susie Orman, Dave Ramsey. Dave Ramsey says term life insurance is a part of a good defensive plan because again, you can get a lot for a little bit. And you don't need insurance for your whole life. If your job is to accumulate wealth, if you're going to be, again, if you start early enough and get a hold of your debt, this is why we talk about debt here at Building Black Wealth. This is why we're doing the savings challenge. This is why we're helping with the budgeting. The idea is for you to build wealth. Your wealth is if you live too long. The life insurance is that if you pass away too soon. Okay, you don't need life insurance for your whole life. You need assets, because the life insurance provides no benefit to you fully financially. Again, depends on what you have. Okay, it just provides you that peace of mind, but it's the assets that do that. Because if you're sitting on $1 million in cash, no debt, and your kids don't need you, why would you want to continue to pay $500 a month for life insurance? Again, not unless you want that as part of your estate build, your estate planning and things like that. That's different. Okay, that's different, but most people don't. Okay, thank you for that, you guys. All right, yeah, I see the chat box. Thanks, you guys. So did you know 80% of death claims paid to African American families are less than $9,500? We're way underinsured. We don't have any life insurance, or we're underinsured. It's not even covering some of you guys may, again, that you may have experienced, not even somebody not having any life insurance. Some of you may have experienced not having enough, and you still had to dig in your pocket and be able to, to satisfy that, And so again, that's why we talk about that, but you got to have both. You got to have assets and you got to have life insurance. Okay. Because again, those assets are going to help you give some breathing room, when you're going through, life, and you want your assets to kind of, to be there no matter what. And those things you can hand down. Assets are immediately created when a life insurance kicks in too, right? But again, you got to get in where you fit in. Plan your work and work your plan. Some people don't want to pay life insurance forever. That's why they don't have whole life. That's why they get term. And some people are perfectly fine paying it, for their whole life. Again, get in where you fit in. Plan your work and work your plan. Next slide, George. Britt, are you out there? Yes or no? I wonder what happened to her.
I'm here. My view doesn't show me. Can you guys hear me, see me?
We can hear you, and I can hear you and see you. What I wanted to do, I didn't know if we're up on Facebook, if we want to, again, chit chat with our Facebook friends. And also I wanted to have an opportunity to ask some questions before we jump right into reasons why millennials also need insurance.
Absolutely. I think on Facebook right now, it's quiet. So a lot of people just kind of like a lot of people here tonight. I'm so excited. We have more than 50 people here still. Okay. I'm very excited about that, along with Facebook. Again, you can go over to Our Village Initiative and you can like it. Make sure you like it. Please make sure you share the video. Right now, it's also on Boss Lady Britt Johnson on my Facebook page. So you guys are welcome to go and share that. And right now it's quiet in Facebook land. However, our chat has blown up and we do have a few questions in here. I know you're not taking questions till the end.
No, you know what? I wanted to stop in the middle, and I apologize. There was a young lady that unmuted her mic. I meant to say that we were going to pause and take questions at the end. So I apologize for misspeaking, whoever that was that unmuted their mic, but I wanted to kind of get through most of the slides before I started taking questions. But we always ask, we always at the halfway mark answer questions, and we answer the rest of them at the end. So you said, so there are no questions out there in Facebook land, so we can go with our peoples here.
Yes, no questions on Facebook land. I think that life insurance is not recognized in terms of building generational wealth because we are passing it down to our children, passing it on to our families to be able to keep prosperous throughout our names versus poor throughout our names. A lot of people underestimate life insurance. And if we have time towards the end, I would love to share my story and why I do support life insurance, even for young people, especially for young people, because it's actually less expensive. At a younger age, I got my life insurance at the age of 22. I had my first child at the age of 18, and then I got life insurance. And ever since then, I've had life insurance for every single one of my children, including myself. And it's not a super expensive bill. And at the end of the day, you don't want to pass away and leave your family with debt. You want to pass away and leave your family with an opportunity to come up. My grandparents passed away. I had an opportunity to come up. It helped to pay for my college. It helped to pay for a car so I could get around to my job. So there's a lot that we underestimate that we're leaving behind. What we don't realize is in the real estate world, when we leave debt behind, that's how we also lose property. That's how we lose our community, because we lose everything that we own, and someone that's got that money from their generational wealth is able to buy into our community.
Yep, awesome. That's so true, and good for you, for getting it so young. Again, that's very rare, in our community. I see it in other communities, but very rare in our community. So nice job. Let's take a few questions.
Okay, so a question that was asked as you were talking about life insurance earlier, in terms of like work, one of the questions that was asked is it ever worth it to get life insurance through your job?
Yeah, good question. Yeah, because some of your life insurance is free. So why not? While you're working there, God forbid if something were to happen, you can get that. Just make sure that your beneficiaries are tightened up with that. If you have that A, D, and D, don't even bother. It's garbage. Accidental death and dismemberment, that's what that means. You have to pass away of an accident in order for them to pay for it. Or you have to have some body part dismembered. That's particular inside the policy. It's a joke. That's why it only costs like 2 cents, per pay period, okay? The likelihood of them paying that out is slim to none. But imagine if they had 1,000 employees and 1,000 employees are paying $2, for that. It's a moneymaker for the insurance industry. Just get the basic, your life insurance, but make sure you get stuff out, outside of work.
Okay. Another question was, when you first apply for a job, you sign up for all of these things. How do you find out if your job even offers life insurance?
They give it to you in the benefits package. When you sign a job, they have a benefits package where it's, again, if your job offers benefits, there are some companies that don't, especially if you work for a nonprofit, sometimes a small nonprofit, or you're working for like a startup or something like that. A lot of them don't have benefits package. You kind of have to figure that on your own, but you can go to your HR department or your personnel department and ask them what's part of the benefits package.
Got you. Another question that was asked is, you had mentioned that the premium is not guaranteed. So does that mean that the price can change?
It depends, yeah. Because let's say that you took out the life insurance policy. Sometimes we do fall on hard times, right? And the policy lapses. If the policy lapses and you have to go back and reapply, they cannot reinstate it at what your premiums were when you took it out 10 years ago. You have to requalify at your age and your health when that policy reinstates. That's what we try to tell people, to stay on top of that. But that's why we do the budgeting and all those type of things, just to kind of make sure that that doesn't happen.
Okay. There's actually a lot of questions here. So
yeah, that's why I wanted to get to them, so I wouldn't have everybody wouldn't have to also wait.
Okay. There is a gentleman that said, I am a felon and I have life insurance, purchased it 3 years ago. I do know that in different states, there are different opportunities, but
Correct.
Every state doesn't offer that. So what's your comments on that?
Yeah, every state that doesn't, and also some life insurance. Again, felons can get life insurance, but they have to go through maybe a different type. There are many types of life insurance that that are out there. Not just the type of types, like whether it's whole life or term, but also there's like final expense insurance or just burial insurance. Sometimes there's cancer insurance. It's like all these different kinds. Okay, so most of the traditional type of insurance you have to qualify for you to get like $1 million and things like that. Yeah, they're going through a medical requirement and they are asking if you're a felon. I appreciate whoever that was that shared that, and I'm glad that you have life insurance, because unfortunately most life insurance companies will still hang that over your head. Maybe some poor choices you made in the past. It's tough, but there is an option. The options usually are final expense insurance, and again, it's better to have something versus nothing. And again, state to state, it varies. Massachusetts, so but it does vary state to state.
Okay, so another question that was asked is, what happens when you have a term policy and live past 80?
Yep. Oh, great question. So it depends on what type of term it is. There's like annual renewable term, means that operative word annual, it renews every year or every 5 years or in 10-year increments. You can keep renewing it and renewing it until you're 100, but those premiums are going to be through the roof, okay? And then there's decreasing term, which means that your cost stays the same, but your face amount goes down. That's how a lot of mortgage companies like to sell you that when you buy your house, okay? And then there's level term. You know, level term is that your cost stays level and your face amount stays level. That way you can properly budget. You're not trying to figure out, man, if it's going to cost me too much, or if my face amount's going down, because what if I need more? What if you have a baby? What if you get more, get more debt, whatever. So level term, the cost stays the same and it also stays level. But yeah, you can renew it. Each company is different. There's a lot of companies now out there that are being very flexible with how long they'll cover somebody in a term policy.
Okay, so this one,
premiums, and go right ahead.
This one is a question of my own heart. So Andrea Nicole Venezuela, this question is a question of my own heart, right? This is the only reason I think that I got life insurance. So how do some people use life insurance for investments? Can you go more into detail about dividends and when you can take it out?
Yeah, so those type of life insurance policies, if you're gonna say that I'm gonna buy life insurance for investment purposes, that's one thing. But if you're talking about that I'm gonna buy life insurance that God forbid that I pass away, my family gets it, you should not be tinkering around that life insurance to buy investment property. Okay, you might as well have two policies if that's the case.
But how would she do that if that was something that was her drive?
So again, that's why you should have two policies, one for your family, and if one you're going to tinker around with because again, all type of investing, there's a level of risk. Okay, there's a level of risk. Whenever you get life insurance, for investment property, usually people get whole life or universal variable life because it has like investments attached to it, and that investments are that separate account is invested in the market, and you usually get like 4, 5, 6, or 7% on that. And again, your money goes in there. They're very expensive. They're like $300-400 because you're putting more money into the investment side than you are on the insurance side. My thing is, why not just get an investment? Why commingle the two together? Because when that value of that portfolio goes up and down, so doesn't your face amount. So some people use it, that they pull from it to pay for, repairs or a down payment on a house or things like that. But my thing is that if you're taking that money for an investment, to buy investment property, why not just open up an investment? Why commingle it with your life insurance? That's all that I'm saying. Some people don't know that there's a better option out there. The better option is to separate the two. If you need money for investment property, just throw it in an investment, something that's going to give you between 4 and 5 and 6%, not aggressive, but nice steady growth. And if you need, you just take it out. It's less fees, less headache, and things like that too.
And that's something that they can do with you. They can actually have a consultation about life insurance and a consultation about investing.
Mm-hmm. Yep. Because it's good. Again, you got to get in, where you fit. That's a great question. But I don't believe in commingling things like that. That's risky. Okay. Especially if your family doesn't know what you're doing and you pass away, that's very risky. Okay. We'll take, how many more, 3 more questions, and then we'll jump back into the slides. Great questions, you guys. I love these.
Here's a question. It says, how do you make a trust the beneficiary of your life insurance?
Okay. So, how do you make a trust? That's an attorney question. That's an attorney because you're talking about a trust owning the life insurance policy, and then what happens is that the proceeds then go into the trust. When you feel it's an attorney and the life insurance person, right? There's a particular type of form, or it depends on what the life insurance company offers, but it'll give you the option that you can list an individual or other charitable organization. You can put that down, but you got to make sure too that your trust is properly set up to be able to do that. But that will require your attorney having a conversation with your financial professional that gave you that life insurance in order for you to do that.
Nice.
Okay. And what did we said? Like 2 more?
There was again a second question about, can you go over trust? Because actually a really good book that you guys might be interested in reading is What Would the Rothschilds Do?
Yeah.
And that book is specifically a book about how the Rothschilds family, one of the wealthiest families in America today still, how they continuously made their trust the beneficiary of the life insurance. And what they did was family members, instead of borrowing money from the banks, would borrow money from the trust.
Yeah.
So one person would pass away, the funds would go into the trust. And instead of the family member borrowing from the bank, they would borrow from the trust. But every family member made the trust the beneficiary of their life insurance. They became their own banking system using that strategy.
Absolutely. And I apologize. I'm plugging this system in here because my battery just is like running low. But yeah, so that's why I said if you come to the event next month, we're going to have someone going over all of that info. Again, I want to stay in my lane. I know enough to be dangerous, but I don't also want to misspeak regarding that.
Okay. So another question from Dorothy was, can I add my husband to my life insurance with a rider? He has a pre-existing condition, which makes it really expensive to get him a policy on his.
I see. Okay. Yeah. With the pre-existing condition, that might be tough, but that's the best way to keep costs low is to add a spouse as a rider. But yeah, if he has a pre-existing condition, that may be tough depending on the type of condition that he has. If it's something that's fixable that he may not get, again, I'm not an underwriter. And each company has their own underwriting guidelines, but it depends on what it is that what their guidelines are. That he may either get rated, which means that it may cost more money, or he may get, decline. Again, it just depends. It just depends.
Okay. We recently had info sessions for open enrollment. I inquired about personal life insurance. It was suggested to discuss option with our provider. Is that typical? I am just really starting to understand life insurance and wills.
Okay, and so you said the life insurance, that was through an employer, Britt? Can you repeat that?
I believe so. It said we recently had a session for open enrollment that was more than likely through their job.
Like, the job, yeah.
And Erica Montfort, if you want to clarify that in the chat, please do.
She put with the employer. Thanks, Erica.
Yeah.
Yep. Okay. So she had open enrollment with the employer, and what was that?
And they suggested that she discuss options with their provider. So again, normally people, they're just learning about life insurance. They don't get to really know who's the provider, how do you contact them, what types of plans to discuss with the provider. So I'm guessing to be more educated prior to speaking to the provider, and is it typical that you would have that discussion with a provider?
Yeah, it depends on how who their provider is, at your job. I never heard that before. But if they gave you the benefits package, they usually will list of what providers that they used for the group life insurance. And that's the reason why I tell people get insurance outside of your employer, so you have to go through all that crap, and that way you're in a lot more control. Okay. But yeah, you want to just discuss that whoever they listed in the package that you need to speak to, regarding that, and then they'll let you know. And your employer, the paperwork should also tell you if you're going to get like 2 or 3 or 4 or 5 times your salary, as well. And Britt, if you can just mention that book again. I think you said What Would the Rothschilds Do?
Mm-hmm.
And
I just put it in the chat for you all.
Okay. Yeah. So find out who that, in that benefits package, there should be a provider. They usually list even with your with the 401k and the 403b, they always list, is it Vanguard, is it TIA, CREF, is it Fidelity, those type of things. That's the part that sucks about some of these jobs, is that they give you like a packet like that's this thick, and they go, you know what, fill all this stuff out and bring it back. Which you're like, well, where do I even start with this crap, right? That's why I said you guys can stay in contact with me, and I'll be happy to help you sift through all those heaps of paperwork, okay? Especially, if you're going to be having that money taken out of your paycheck, yeah, you want to make sure that you're picking the right ones, okay? My information may come out. You're welcome, Erica. My information will be at the end, at the slides. And George also too is popping that stuff into our chat box. And again, if you guys are liking, this information, again, we're going to be here for a little bit longer. You can still feel free to share the link. Also, we love your support, for sharing the link out or whatever it is, that in your ways. You can pop in the chat box if you thumbs up or thumbs down, or even a blank face emoji, if you're still confused on some things. Again, this is what helps us also do better.
For everyone that is getting it, what will help us is if you want to go ahead and pop some sevens, right? Seven's a lucky number, seven's a money number. Pop some sevens into the chat. Let us know that you're understanding this information. You want to learn more about this information, that you want to really get this information out to your family members, your friends. Like, this is how you build generational wealth, is understanding these different strategies to building generational wealth. What your parents couldn't pass down to you, you want to pass down to the next generation. Another great question that I see here in the chat by Gabriel is term life enough? I got rid of my whole life. I actually did the opposite. I got rid of my term life, and I ended up switching the whole life. But your feedback.
That's why we need to talk. So yeah, term, it's not so much is it enough, that because I don't know what your debts are, I don't know what your expenses are, I know what your lifestyle is like, I don't know how much of your income you're replacing, so I'm not really sure to say it's enough. If you're making $50,000 a year and your life insurance is $150, then you don't have enough. Remember, the slides had said either 5, 7, or 10 times your salary, depending on your dependence and your lifestyle situation, Gabrielle. So it depends. Again, if you're not sure, I'd be happy to take a look at and see what it is, and also to make sure that you owned the right type of term insurance, if that's what you have, okay. And also to making sure there's term insurance. Some people, like, my insurance is really cheap, I only pay like $5. Okay, so what kind of term insurance is it? Because they're not all equal. A lot of them are stripped from some other benefits, and sometimes too, some people have a 10-year term and I think it's 30 years. Because again, when are you going to read that? And if you do read it, do you even understand it, right? Do you even understand? So just be very careful, especially when you're out there, getting quotes and stuff like that. You got to make sure that if you're going to compare apples to apples, that you're comparing a Granny Smith to a Granny Smith, not to a Gala or Delicious, okay? All right, so let's jump back into the slides. And again, keep the questions coming. I'll be happy to answer them at the end. And George, what we're going to do, because I want to make sure that I answer the rest of the questions, we're going to just fly, through those slides, okay? So while George is, thanks so much, Britt, and thanks everybody for out there in Facebook land for being with us this evening. We always appreciate you guys who are out there on Facebook land, especially for those who are here with us on the Zoom, that always help you guys out by sending this link out to you, and then for you that are on Facebook, for sharing it with everybody else. Again, we can't do this without you, and so thank you. You're the reason why we're also able to go state to state and get information to other states. Again, this is not just for us from Massachusetts. It's for, again, wherever our people are that need this information. All right, so 6 reasons why millennials need life insurance. Number 1, to protect your insurability, as I said before. So that way, God forbid, if you get some impending, predisposition, based on genetics, you're already covered. Number 2, cost of low, because you're young and mostly, usually relatively healthy. Again, if you're leading a healthy lifestyle when you're young, you provide income for any dependents like kids or parents, because there are some young, millennials that still have little kids, right? Or getting ready to start, families, okay? You want to provide, you can't replace use, replace your income. It's to supplement your company life insurance. Again, if you have the life insurance to your job, and you think you're going to retire, you're going to be there for a long period of time, get the employer plan. Why not? And if you want to get 8-10 times your salary at your job, you can do it. Like I said, it's like pennies on the dollar. Just know when you leave, you can't take it with you. Okay. You can't take it with you. All right. To cover fueling expenses, the household expenses, you contribute. There's a lot of kids that are still living at home, 25, 30, 35 years old, because it's expensive out there. Rent's expensive. Okay. So if you're there, and you have heaps of credit card debt, listen, here's another gem for you. If you're not married and you live at home and God forbid you die, your next of kin handles your all your financial affairs. And who's your next of kin? Your mom or your dad. So you better have life insurance. Here's a boomerang gem. If you live at home with your parents and they're not married and your parent passes away, you inherit their debts too. So you make sure that your parents are covered if you're living at home and your butt's covered if you're living at home. Okay. Again, you don't want 2 generations to be devastated. All right. All right. And last one too is to pay off student loan debt and credit cards. So again, just because you pass away doesn't mean that stuff passes away with you all the time, especially if you got those Parent Plus loans and you co-sign stuff. I'm telling you, just get it. Okay, just get it and forget it. Just get it and forget it. Lock yourself in, get it, forget it. Put all your personal papers and just let somebody know, that is there. Next slide, please. Okay. So should life insurance be part of your wealth building journey? Okay. Yes. Okay. So let's just jump right into it and explain the reasons why, because I'd rather show you than tell you. Okay. Here's what it looks like. Now, some of you guys may or may not remember the Rule 72. You guys know I love to cover this rule. This is a wealth building rule for those of you out there in Facebook land, or those that are joining us for the first time. You can Google it. It's also called the banker's rule. I'm going to verbally tell you what the Rule 72 is. Okay. I teach this to 8 and 9-year-olds because they know their divisions and timetables. I've been teaching my god kids about this. Again, those that want to listen, to it. And also I teach my clients. Some of my clients are on here this evening. I see you. I'm glad that you're here. You guys know I'm constantly drilling you over and over and over again, because everything that I do is about wealth building. But the life insurance, IRAs, Roth IRAs, independent mutual funds, getting out of debt, building your credit score, that's all part of the journey. But the end result is you having wealth. It's wealth. So this Rule 72 is all part of it. It's called the banker's rule. All it is going to show you how fast it takes your money to double. Once again, it tells you how fast it takes your money to double. How you do the math, you take 72, you divide it by the interest rate, and that's going to tell you the number of years it's going to take for your money to double. So let's say someone passes away, you inherit $10,000 from life insurance proceeds. Let me show you how, if you have life insurance or you happen to, or somebody wills you life insurance, how you can build generational wealth like that. If you get 4%, 72 goes into 4, okay, 18 times. That means if you're 29 years old, so your grandparents left you 10 grand by the time you're 47 years old, because the money doubles every 18 years. So 29 to 47 is 18 years. The 10 doubles to 20. And 20 years later, 20 doubles to 40. So you have an additional 40,000. So it's not 10 grand. You have an additional 40,000 just because money. That's on top of your 401k, your 403b. Now, if you go out there and get 6%, 72 goes to 6, 12 times. Now the money's doubling once every 12 years, 10 to 20, 20, 40, 40 to 80. Okay, 40 to 80. Now you're 65, you got like 80,000. But you guys, take a look at 12%, same $10,000. See, people always go, where did I get 12%? That's why you got to show up. That's why you got to come here. Most of you guys, like Benicia, she knows where to get 12%, right? A lot of you guys, that have been with us for this ride for the past couple of years, you guys know where to get that. We tell you where to get that. This is all about wealth building, not, learning how to get by. Nah, this is about us building long-term wealth. You save for emergencies, but you invest for wealth. I'm gonna say it again. You save for emergencies. Don't have 6 figures just sitting in a checking account. I mean, now if you're gonna use it in next year or whatever, that that's different, okay? But if you got 6 figures sitting in your checking account, you're too scared of the market. No, be scared that you're gonna run out of money. Be scared you're gonna run out of money. Okay, 12%, 72 goes into 12 6 times. Look at what you can have at age 65, in addition to whatever you have. 10,000, that's what I'm saying. Life insurance proceeds can create first generational wealth. Even if you caught a case from a car accident, okay, right? And you got $10,000, you throw it in there. Don't go buy a bedroom set and a dining room set. We got to get out of that consumerism, okay? We got to get out of that. What they said, that the new numbers now, the net worth of Blacks are going to be like 0 by 2035. That's, you know what? That sickened me when I heard that. I read that. It sickened me. We have to become producers, and producers produce generational wealth over and over and over again, not consuming. All them bags and shoes and clothes and cars that are sitting in your driveway, you can't pay for college for that. Even if you sold it tomorrow, you're going to get back what you paid for, what you're currently paying for. It's wealth. Take your income and convert it into wealth by investing it. If you pass away too soon, give your loved ones an opportunity to have wealth by investing the life insurance proceeds. Okay, next slide. So let's take that's 10,000. What if you have a proper life insurance plan? Is 100,000. Okay, it's 100,000. And whether you put it in something that's conservative, a balanced fund, or an equity fund. Again, 4%, you got 100,000. You guys, the money's doubling once every 18 years. At age 65, you can have 400 grand. Who in your family is sitting on 400 grand? Okay, at 65. At 65, first of all, who's even leaving 100,000? Who's even leaving 100,000 to you? You guys, right today, if you choose, I know not all you won't do it, and that's fine. It's just some of you will. If you choose to get insurance or get your life or make sure you got the proper coverage and proper insurance. Don't go broke over it though, okay? Make sure you got the proper insurance. You can create generational wealth, man. Imagine giving that to your babies. You know, why is Britt talking about the Rothschilds? What about the Williamses? What about the Jones? Okay, what about the Johnsons? You know, that are out there. What about the Lewises that are out there? Right? What about the Whaleys that are out there? What's wrong with doing that for your family? You put it into a balanced fund, you guys, getting a nice conservative, moderate rather, 1.6 million, and then forget about it in equities. 6.4 million? 6.4. What kind of quality of life? Yeah, the Masons. Hey, look at that. That's right. Shout your last name out, right? What about the Montforts? What about the Boswells? That's what I'm talking about. Why should your family be denied? But why should you be denied? You guys, you don't have to wait for someone to die. You can also do that now. We talk about that in our investment seminars, and how, again, a little adds up. $50 a week compounded over a 30-year period at 9 and 12% will give you between 700,000 and up. $50 a week. This is why I talk to kids. This is why I go into schools and teach kids. This is why I do financial seminars at churches. This is why when you guys ask me to talk to your family, some of you were cool enough to allow me to do Zooms like this for your family members. Because again, we need to talk about this in our community. I have no problem doing that. I'm your fam. We people of color, especially my West Indian folk, you know how that is. You probably related somewhere down the street anyway, right? Someone's always someone's cousin, right? George always laughs at me because I always find a new cousin out here on building Black wealth. But I do, right? Again, you guys, over $6 million for 100 grand. That's what you set it and you forget it. That's on top of what you do. Or what if you don't have anything, but someone left you that money and now you have a great quality of life? It's all about having options and a lifestyle with options. And that's where you hand that down. Imagine handing down 6.4 million, to the next generation. Imagine taking 6.4 million and investing that at 12%, and game over. Game over. Okay? That's how you can build generational wealth. We got to change our mindset about life insurance. It's not negative. We got to change. That's how we make an impact in our family and change our family tree forever. Forever. Next slide, please. Okay, again, you don't buy life insurance because you are going to die, but because those you love are going to live. because those you love are going to live. So you want them to have that quality of life, right? But again, you can also still enjoy your income too. That's why we talk about investing, outside of your job and things like that, inside your job too, so you can be able to have options. You can enjoy your money now, but also, God forbid, if you pass away too soon, the life insurance is there. But if you live too long, you also want to have some assets, because life insurance, again, you can't, again, depending on kind of what you have, there's a better impact when you have your money invested. Okay. I think that, and so listen, I hope you guys learned some new things or change your mindset about life insurance. Joy, I believe that's the last slide. You can go to the next one. We really appreciate, all the support, that you give, to us. We want to make sure that we'll always bring it every single time that you come. If you're going to commit, 2 hours to be with him, I don't, want it to be boring, or two, be like, oh yeah, I've been there, done that, or heard it before. Now we try to level it up so you can learn something new, but most importantly, take action. Take action. Big deal. We talked about the Rule 72 if you don't apply it. Big deal. We talked to you about life insurance. You still don't get it, right? Or you don't have no one review your policy. You want to make sure that you go out there and take this information, apply it. So that, again, that way when, see, the holidays are coming up, it's going to be a new year, new year soon. How has COVID impacted your life that made you more aware, especially impacted us financially, not just emotionally, but it impacted a lot of us financially. What are some new things, that you did differently for 2021 because of what happened in 2020? Or are you still doing the same thing, expecting to get a different result? It's not going to happen, especially now the job market has changed. You're competing with a lot more people. I hope you leveled up your skills, right, to be more marketable. I hope you leveled up even some of the things that you were doing financially. I hope you took something that we talked in regarding our past events. Again, all of our past events are posted on our Village Initiatives Facebook page. They're all archived there. You can go back. Sometimes I love it when you guys are telling me that you have your kids watching them. I love that. I love it even when you have your kids here with us this evening. I love that. I may even talk to Denisha about doing something special for your kids. If that's something that you think, that you may want us to do, we'll do that. Listen, we like the feedback. We want to get that feedback. I wanted to even do something even special just for Gen Zs and Millennials, because you guys are being overlooked and you guys are getting killed by debt. Okay. Student loans. Ain't nobody walking you through how to get out of that stuff. Okay. But we hear you, but we also want to hear from you more. Okay. So that's why please stay in contact, with us and give us that feedback. What we're going to do right now is to jump into some questions. And then too, I got another meeting. Go figure. It's back to back all day. Listen, I still got my cape on. I got to save some food.
Right. Got that S on your chest.
Hey.
Okay. What are good investment resources for kids under 7? Websites, books, programs. Is it possible for children to have life insurance policies? Is it possible for children, and at what age can they start investing? Yeah.
Okay. Yes, and yes. Okay. So at what time could kids start investing? Early. You know why? Because the parent controls that. You can get a guardianship account with them. You can get like an UGMA or an UPMA account, or you can get a guardianship account for them. And that way you supervise the account because they're still young. And then when they turn 18, they can take the account over. I did that with one of my godkids. Okay. That's how you can start them, especially too for you guys that are looking to start families, or you currently still have a little baby inside you growing. I always tell, listen, some of my non-melanated clients, they put money away for the kids that they don't even have yet. And then when that kid is born, they open up an investment for them. See, we gotta don't hate. We gotta take notes on what they do. Okay, but you can open up a guardianship, account from them that you supervise, and you can help them pick, stocks and stuff like that. Okay, never too young. Whoever asked that about, listen, if you guys want a parent guide, send me an email, MLB, like Major League Baseball 611@gmail.com. I'm going to be changing my email address too, by the way, but we're going to keep it this one.
We love MLB.
Listen, I don't know if she's on here, but a good friend of mine was like, I got a good one for you. It's called Michelle Builds Wealth @gmail.com. Boom. Okay. So that to me, because that's what I do. My job is to show you guys how to build wealth, okay? So again, you can send me an email. I'll send you a parent guide about how money works, and you start talking to your kids as early as age 4, okay, about money. Okay, what was the other question in that 3-part question?
The other question,
and was it opening the investments? Should kids get life insurance? Yeah, especially if you added them on as a rider, it keeps costs lower, you know, as opposed to getting individual policies, you know, for them. That's if your insurance company will allow it. Okay, some companies, that's not how they operate. I know with mine, we do that. We don't like putting individual separate policies on kids. We have the husband and wife, we add the spouse on as a rider, and we add all the kids on as a rider. So all 5, 8, 3 kids can be covered for one cost, okay? Again, all insurance companies don't do it, but find out how your insurance company does that to keep your costs low. But kids should have it. Kids absolutely should have it. Because again, no one's gonna make it out of here alive, okay?
right. I was told that, hold on. I was told there is a cap on the amount of insurance you can qualify for depending on your income. Is that true?
That may be true for that particular insurance company. That may be true based on that. I've never heard of that before, because insurance companies are in the business to make money. So if you can financially stable to pay for it and you can cut the check, you can cut, they'll take that check.
Yeah.
I never heard of that before. It's a good question, but I don't know. But again, all insurance companies are different. Okay, there's a lot of them out here. Okay.
So another question that was asked, and again, you know, when we think about life insurance, so many people think about the morbid side of it instead of the generational wealth side of it. But a question that was asked is, what is the average cost of what is the average cost of final expense policies?
Yeah, it depends. Okay, so let me just tighten that word up a bit. What's the average cost for a funeral? And a funeral procession is more like it. And then what's the maximum that you can get covered for a final expense insurance? Okay, so I'm just tightening up that question. So the average funerals are 15 to 20 grand. It's even going to cost you a couple of grand to cremate somebody. Just being honest. Okay, either way, you got to dig in your pocket, right? But it also depends on how lavish you want those services. The services can run you like 30 or 40 grand, depending on how many people are there, where you have it, and what kind of casket and things like that. Now, final expense insurance, I believe the highest they'll go is 50,000, but you got to check, because I think final expense insurance is like what, Colonial Penn, Mutual of Omaha, I believe, are 2 companies that offer, they offer regular, but they also offer final expense insurance. But I think the most that because again, then you're not going through rigorous underwriting, so they're not going to give you like a $500,000. Okay, I believe it's either 25,000 up to 50,000. But check. But each company again is different.
There's actually a really good story in the chat that I don't want to butcher your name, but Vanessa had put, and it says, I have a friend whose father left him a trust where he gets a stipend every year.
Yep.
He is able to have a job and make $45,000 a year and still live. He gets laid off. He is still all set. House and car paid for. We should be able to do that for our kids as well. Absolutely. Absolutely.
Yep.
Again, just kind of sharing my story with people.
Yep.
You know, my grandparents had everything set up in terms of their life insurance. And what they actually did is they looped their bills and their mortgage into a specific amount. And they made the life insurance policy be able to actually pay off their home in case they passed away before the house was paid off. And it absolutely did. It was able to pay for
Awesome.
up to the last mortgage payment. I actually made the last mortgage payment on my grandparents' home. And
Awesome.
yeah, and because of that, we owned the house after they passed away instead of continuously having to pay mortgage payments on the home. So I think that's great. The concept of how do we create an income for our children that they might be able to live off of, and how does somebody assign the amount that they would want to stipend off to their family member?
Yeah, again, you have to sit down, you got to sit down with like two people. You have to sit down with like your financial professional, because they're the ones that usually goes over like your immediate personal finances. And that way you can get everything organized. Then you go and you talk to the proper attorney. So that type of trust that she was talking about, I believe it's called a Spendthrift Trust. Again, I'm going to stay in my lane. I know enough to be a little too dangerous. Okay. But again, that's what we're going to be talking about next month when we get the professionals on. But I believe if we're talking about, it's called the Spendthrift Trust, where you can eke out, like a lot of celebrities do that for their kids. I know when the Hiltons were young, from the Hilton family, they had millions of dollars in there, but they couldn't touch it until they were either a certain age. But for those individuals too, thank you so much, Anthony. Appreciate that with the little emojis. What happens is that that person, that trustee is the one that set that up, because sometimes they're just irresponsible with money, or they're not good, or they didn't have enough time to teach them how to be better with money, so to speak. So they eke out that amount of money, so that way they don't get in their own way and be broke. Because again, we hear of athletes, R&B artists, singers, actors, whatever, models, and they go broke, because it's not the money, it's the mindset. If you don't know how to listen, if you cannot manage 80 grand a year, you're not going to manage 80 million. It's the way that it is. Just the way that it is. If you can't manage a little, you're not going to be able to manage a lot. Just the way that it is.
Right.
Okay?
Absolutely right.
Just the way that it is.
So there's a question in here that says, and this is maybe a better question, and it might be a good idea to bring on a probate court attorney for future value or future questions. But what happens if someone in your family passes? Where does the money go? Before you answer that, for all of you out there on the real estate side, if someone in your family passes away and there is no will, and there's so many family members, what happens is probate court actually steps in, and they determine what happens with that house. So it's very important that people have these conversations about what's going to happen with the family's homes and or trusts or life insurance policies. But Michelle, what happens if someone in your family passes away, and where does the money go?
Yeah, so if someone passes away, when you say, where does the money, what money? The life insurance proceeds, money they got in their 401k, checking account, savings accounts?
I would imagine for the life insurance, let's say a beneficiary wasn't assigned and they have a life insurance.
So if there's no beneficiary on your checking account, savings account, your 401k, which there usually is, retirement accounts, it usually is. You got to be careful. You guys are out there, please be careful with those Capital One 360s and Allies, all these things that are online. Make sure you got beneficiary set up. I'm saying it again, check your accounts. Make sure you got beneficiary set aside for those. Okay, retirement accounts, usually they automatically ask for them. I know I'm going back with my clients and making sure that they have, they're called transfer on death forms. God, if they pass away, they don't get stuck, because that becomes part of your estate. That's what Britt's talking about. That will go to probate. Okay, that becomes part of your estate. You guys, you don't need to be wealthy to have an estate. Your estate is everything you own, whether of value or not value. Of value, checking, savings, 401ks, 403bs. Not of value, student loans, credit cards, car notes, even maybe your house, depending on how you have it, if it's investment property or not. Okay. Congratulations, all you guys have an estate, but everything you own. So your cell phone, your wallet, your cell phone, your laptop, furniture, that's part of your estate. You got to change your mindset. It's not just for wealthy people. It's everything you own, of value, not of value, is part of your estate. If you don't have that stuff, tighten up with the will. That's why I said, make sure you guys got your assets down here for next session to learn about that. Okay.
I saw a chat in here that said thank you to when we had Shabnam on, the will and estates attorney.
Yeah, Shabnam's great.
Yes, and someone got their will and their trust set up through her. And I'm actually getting ready to do that myself. And just to clarify myself, the question was asked, what if everyone in the family passes away And so then even the beneficiaries pass away, and then the person passes away.
Part of-
Where does the money go?
That could happen. God forbid, in a house fire, plane crash, car accident, that could happen.
It goes to probate.
It goes to probate. It's part of your estate. There's no, they'll look for next of kin. There's no next of kin. All that stuff goes to the state.
Yeah, goes to the government. Unless you have a sub beneficiary as a nonprofit. So let's say a contingent. That's the word I was looking for. You have a contingent if every next of kin passes away, and I'm not the person to even be speaking on this. I'm sorry, Michelle, but you can make the beneficiary a nonprofit, and a lot of older Caucasian people, they might make like PBS, or
they get
they might make a museum or a college. They will make them the beneficiary, and that's how those wings and different classrooms get named after them.
Yep, so true. Yep. Yeah, great questions you got. You know what, guys? I'm proud of you. You guys have awesome questions, and most importantly, I like that you don't let pride stand in the way. Because like my mentor says, either you be humble and wealthy or prideful and broke. I'm glad you're not letting the pride step in and not ask questions. Thank you guys. Because again, when you ask, you may prompt someone else to ask, or those that may be too shy to ask, then you help answer their question. So again, this is all about teamwork. This is a family here. It's all about a community here. So thank you for asking those questions.
And if people need any clarification with any terms or any language, do not hesitate to pop that in. You might have a question, like Michelle said, that somebody else has. You need clarification on anything. It's important that we get this knowledge out to people. Again, you have the opportunity to really change your family's trajectory, knowing this information and actually applying this information, applied knowledge. So another question that I see here in the chat is it true stocks, mutual funds should not be beneficiaries because of taxes?
That a stock or a mutual fund should not have beneficiaries?
That is the question. Anthony, if you want to clarify at all, but that is the question. Is it true that stocks, I guess if you own a stock or if you own mutual funds?
Yeah, so I saw like some videos that say like the tax implications, because like let's say you have a whole bunch of stocks diversified and everything. Like when we pass, there's a chance if we don't direct it accordingly, like say I have my wife, or well, whatever wife will be in the future, but child as the beneficiary, instead of like, let's say I pass, they'll cut the check for whatever the value is, and then they'll be taxed on everything versus I think the way they said it should be is have them as, I don't know the terminology for it, but maybe like a co-owner of it. So therefore it stays invested in everything in the way that it's done.
Yeah. Okay. Yeah. Great question. Yeah. So what he's talking about, see, you guys, another reason why you want life insurance too is life insurance proceeds are not taxed. You imagine getting $1 million in paying, that's better than the lottery. First of all, let's talk about the lottery. That's false advertisement. How you gonna tell somebody you can get 80 million? You ain't getting no 80 million, right, guys? You know it's 40 million. Where's my other 40 million? Actually, there's a loop. I know the loophole how to get around it. I'm not gonna cover it tonight, but I know the loophole how to get around it. Look at Brett. There's always a loophole. There's always a loophole. Always a loophole. But anyway, that's for another day. All right. So yeah. So what you want to do is you can do what's called, like, if you own the account together. Again, some people may not. You can do it with joints of survivorship. So you can do tenants in common or joints with rights of survivorship. If it's joints with rights of survivorship, that person's proceeds then rolls into you, then you can reinvest and you have to really worry about that. Okay. But if it's like tenants in common and things like that, their portion of those proceeds, that has to kind of get settled, and that part will go into, I believe, the estate planning part, but whatever you have, doesn't. Okay. Because investments, that person will have to get taxed unless you have municipals. That's why I love municipals. Okay, Britt, you already own one, so don't need to look at me. Remember, you do.
I know, like that. That's what
you.
like drew me in, like at the jump was the municipals. I was like, wait, what?
Those municipals are the greatest thing since sliced bread. Again, we're not going to go into that today. When we go into the wealth building down somewhere in the schedule, again, so you guys got to be here. See, that was like an early gem that I gave you, right? Those municipals are everything, because you don't have to have a Roth IRA and wait till 59 and a half, to have tax-free money. So y'all keep talking, again, right here, we tell you the scoop. We tell you what you can enjoy now and later. Anybody got time to be waiting to 59, 65 and a half? You can have tax-free money right ahora for my Latinos out there, okay? Right ahora, right now. You can have that right now, okay? You don't have to wait.
Yes. Okay, can you talk about secondary beneficiaries?
The contingents, yeah. So God forbid if there's a primary that's on it, let's say that the primary beneficiary passes away, then the proceeds will go right down to the next will go down to the thank you, George, will go to the contingent. He's the best, right? We'll go to the contingent, whoever you have listed there. Okay, you can have anybody there as long as they're 18. Oh, by the way, too, if you put down a child as a beneficiary, you got to have a trust, because remember, God forbid something that happens to you and that child is not 18, they can't cash the check. Okay, they can't cash the check. I had a good friend of mine pass away. Her husband was not nice, and due to stress, she died of a massive heart attack, massive, at 35, okay? The year before, we took him off and put her babies on. We never got around to doing that trust. But when she passed away, my company set up trust for all 3 of her kids and put the proceeds in there. He didn't get a dime, okay? But that also meant that nobody was able to, use the money. I mean, she had money anyway, so it wasn't a big deal. So they would pay for the proceeds. But when each child turned 18, Primerica released the funds, to her babies. Okay, we're not in the business of setting up trust. That's not what we do, but we will do it if the person hasn't gotten around to it. But you got to do that. Okay, you're going to put a young child as a beneficiary. You must set up a trust or have some type of guardianship set up ahead of time.
Okay, Pashan, every once in a while he sticks I'm not sure of the gender, sticks an interesting, challenging question in here. So, all right, this is a numbers game. The company I work for matches 5% of my contribution, and I contribute 10% to my 401k and 1% to my Roth account. What's the difference between the two, the 401 and the Roth account? And is it wise to move my contribution to 15%?
Okay, is it wise to do the 15%? If your budget can handle it, do it. If your budget can handle it, as long as you got your emergency fund money padded, don't focus on your later money if your now money is not tight. Okay, so make sure. We'll take one more question. And I got to scoop because I got another event that I'm speaking at. Okay, I just texted, so I'm going to be a little late. Okay, so if you can max it, because you can contribute $19,500 a year to a 403b and a 401k. Okay. Your 401k, if it has a Roth feature, it's still the part of the 401k. They're just letting you know that you have some that's tax deferred and some that's tax free. Okay. So if you could do both, do both. Contribute some to the tax deferred and can contribute some to the, to the Roth portion. Just know that if you put more in the Roth portion and you're a high income earner, or you already get killed in taxes because you don't have any kids, you don't have a business, you're not married, you're going to get wiped out in taxes. You want to make sure that you add enough to the tax deferred side. Again, that's part of my area because I'm licensed in investments, but make sure you talk to your tax professional about what strategy, because they kind of run your numbers and know if you're going to owe or if you're going to get money back. And that's how they'll be able to tell you how to offset that. Okay. To offset that. But you guys had great questions. And Britt, if you could do me a favor, I don't know if you have all the questions, written down.
Yes.
maybe what I'll do is I'll do like a random recording and answer all your questions, and we can post them to our village initiative. Again, you guys, thank you so much for, you know, for showing up. But and your questions were so awesome. You guys are the best. We thank you. Stay in contact, you know, with us. If you enjoy this, please pay it forward and let your other friends and family know to jump on next month, because we're gonna hit it heavy. You know, next session. Thank you so much for the love, you guys, and all that positive feedback and the energy when I wasn't feeling well. I felt I felt so awful not being on here. I felt like I abandoned you guys, you know. So, but I heard, you know, that my cousins and those guys came and did an awesome job, and you guys, you know, enjoyed it. And I appreciate, again, all the well wishes and the support that you gave us. Really appreciate that. For my Building Black Wealth fam out there on Facebook, we love you guys. Thank you so much for always tuning in, supporting, and sharing. And again, you guys help us get connected to everybody else in other states, and we really appreciate that. And thank you for everybody too that participated, that invited other people here. Tell them thank you. Okay, because they paid it forward. We need to get back as communal people, tap into our ancestral roots, you know, with that. So again, you guys, be kind to your income, okay? Your income is what's going to help you build wealth. Don't be building wealth with Jeff Bezos. I believe he just bought a $500,000 yacht. He'll be all right, okay? Invest that money for yourself. So be kind to your income, and then also, and know that wealth building is not something that's unreachable. We can do it, and we want to make sure that we give you all the tools that we can give you to know that to let you know that it is possible for you. It is not exclusive. It's inclusive. It is, you know, it is for you. And so with that being said, also too, shout out to Denise.